Joe Biden just made FHA loans a lot more affordable. FHA loans are probably some of the most popular loans, especially for first-time home buyers. With the ability to buy your first home with as little as 3.5% down, enjoy more flexible credit requirements, it's no wonder that FHA loans are probably the most popular loans for first-time home buyers. But that being said, there's always been one thing that made it just a little bit worse than the conventional counterpart, and that was higher mortgage insurance premiums. But lucky for all of us, Uncle Joe is changing that because today they announced that they are making some huge changes to FHA mortgage insurance premiums that's going to save you a ton of money when buying a home this year. So in this video, I'm going to cover exactly what those changes are, why it matters to you, and show you some examples of how much money you can save by using an FHA loan to buy your first home this year. Now, if you're new to the channel, my name's Keaton. I'm a loan officer from San Diego, California, and on this channel, I help people just like you learn how to buy their first home and make the mortgage process a lot easier. Now, if you learned something new during this video, consider subscribing, and if you got any questions, leave them in the comments down below. Or if you just enjoy content like this in general, consider leaving your favorite emoji. Whatever you decide to do, it really helps me with the algorithm and helps me reach more home buyers just like you. But anyways, that's enough about me. Let's get into these changes. All right, so the big news is that the Department of Housing and Urban Development, alongside the FHA, under the direction of the White House, basically decided that they are going to be slashing mortgage insurance premiums for FHA loans across the board by 30 basis points. Now, I know that sounds like a lot of words, but here's exactly what that means. So as you can see on this chart, these are the old mortgage insurance rates for FHA loans versus the new ones. And across the board, they've been lowered by 30 basis points. So regardless of how much you're borrowing, regardless of how much you're putting down, you're going to be saving some big time money compared to the old mortgage insurance rates. But one of the most exciting parts that's kind of flown under the radar is they also increased a loan limit amount as well for mortgage insurance rates. Under the old rule, your mortgage insurance premium would jump from 85 basis points to 105 basis points if you were borrowing over $625,500. But under the new rule, that loan amount actually jumps up to match the FHA's conforming loan limit of $726,200. So even more so for people that were in this kind of middle range between those two limits, you'll be going from paying 105 basis points all the way down to 55 basis points. So really, that's a 50 basis point switch, not just a 31. So all in all, that constitutes a huge change in mortgage insurance premiums. So by now, you're probably only hearing BIPs and mortgage insurance premiums and loan amounts, but how does this actually translate to real savings? Well, let's just jump into some real life examples and see how much the average home buyer stands to be saving under these new changes. So let's start, for example, with a $500,000 purchase. Under the old rule, you'd be putting 3.5% down, which means your mortgage insurance premium would be about $347 a month. But now under the new rule, the mortgage insurance premium drops all the way down to $225. So that constitutes a $122 a month saving. Now, while you can definitely just pocket those savings and enjoy that extra money, this also allows an opportunity for home buyers to increase their purchasing power as well. So to end up with the exact same mortgage payment as the old rule versus the new one, you could effectively increase your purchasing power from $500,000 to $516,000. So by increasing their purchasing power by as much as $16,000, that could mean a lot of different things, whether that's buying the home that you really wanted or breaking into another price point, or being able to have the seller come in and cover some of your closing costs, or do it for like a permanent or a temporary buy down. Additionally, I want to take a look at what it would look like if you were at that $700,000 loan amount. Under the old rule, at a $700,000 loan amount, your mortgage insurance would be about $612 a month. But with the new rule, that drops all the way down to about $320 a month because of that extra increase from the loan limit. So that's about a $290 savings. So once again, you could either pocket that savings or translate that into some extra buying power to the tune of an extra $40,000. So imagine that, going from a purchase price from $700 to $740 just on this change alone without having to do anything extra to your payment. So overall, I think these are going to be really welcome changes for most first-time homebuyers, especially those using FHA loans. Being able to pocket your extra savings or being able to, figure out some negotiations by bumping up your purchase price is going to be a big win no matter which one you choose. Now, while the federal government certainly has a lot of work to do to fix the overall affordability and supply crisis that we've got in housing right now, I do think this is probably the best case scenario and a really positive step forward for fixing affordability. This makes the FHA loan a lot more accessible and makes it, significantly less worse than its conventional counterpart. Now, while for the most part, those who have got great credit and use a bigger down payment are probably still going to go with a conventional loan, I think for a lot of people, this is going to make the conversation a little bit more interesting when comparing conventional and FHA loans. So that being said, if you want to see a comparison on what an FHA versus a conventional loan would look like using these new rules, leave a thumbs up in the comments below and I'll start putting that together for you. So these changes take effect on March 20 of 2023. So if you're watching this video, you're gonna have to close your loan on or after that date in order to be able to qualify for these changes. That being said, a lot of lenders, including ourselves, are honoring this change so long as you close your loan on or after that date. All in all, I think this is a very welcome and honestly a long overdue change for the FHA loan. FHA loans are designed to make home buying a lot more accessible, and this change definitely accomplishes that. If you're thinking about buying a home with an FHA loan this year, make sure you click the link in the description below to book a one-on-one call with me to see how we can get that done for you this year. Now, the FHA loan is probably one of my favorite loans. It's a really, really versatile and flexible tool for first-time home buyers, or really any home buyer to be using. So if you want to learn more about FHA loans, check out this video that's going to cover the 23 secrets of FHA loans that you probably didn't even know about. So that's all I've got for this video. I hope you enjoyed it. If you did, make sure you hit that like button, subscribe if you haven't already, leave a comment if you got any questions, and I'll see you in this video next. See ya.